I think long-term, money disappears as a concept. That was Elon Musk. And when the guy who builds rockets, puts robots on factory floors, and lives obsessed with efficiency says money could become a thing of the past, that's not a catchy line, that's a signal. Because this isn't philosophy. It's more like a warning in disguise. If 2026 really is that turning point Elon keeps poking at when he talks about the singularity, the shock won't be technological. It'll be economic, costs collapsing, productivity exploding, AI doing in minutes what used to take entire teams, robotics leaving the lab and becoming assembly lines. And then the question changes instantly. If everything gets easier to produce, what still holds value? And here's another Elon line almost no one connects the right way. Energy is the real currency. Energy as money. And that's exactly where Bitcoin shows up. Not as hype, not as a trend, but as a logical consequence. Because in a world where intelligence becomes a commodity, what anchors value isn't opinion. It isn't a pretty narrative. It's a physical limit. It's scarcity you can verify. It's final settlement. And let me be crystal clear about what this video is not. This is not Bitcoin will pump because of AI. It's something else. It's this: the singularity doesn't kill money. It kills weak money. And it forces the world to choose a new standard, even if nobody wants to admit it. And the worst part? This shift doesn't arrive with sirens. It arrives looking like routine. An update here, an automation there, AI agents making micro-decisions inside the system. And by the time you notice, the game is already running at a different speed. So today, I'm going to show you the thesis almost nobody is explaining clearly. How AI, abundance, and energy could push Bitcoin from a speculative asset to monetary foundation. And the most important part, you won't see this in the price first. You'll see it in the real world. Most people hear singularity and picture sci-fi, everything in the cloud, everything weightless, everything virtual. That's the trap, because the more powerful AI gets, the more it collides with the physical world. AI doesn't run on vibes. It runs on electricity, chips, data centers, cooling, security, networks that can't fail. So infinite abundance has a hard ceiling. Energy, latency, reliability. And that flips the entire money conversation. If AI collapses costs across the digital world, what becomes scarce isn't intelligence. What becomes scarce is what supports intelligence. Energy, infrastructure, truth, and final settlement. Now look at traditional money through that lens. It's basically a database of promises. Trust, intermediaries, reversals, permissions, temporary rules that become permanent. That works in a slower world. In a machine speed world, it starts to look fragile. So the real question is simple. When everything accelerates, what becomes the last layer of money? What system settles value without depending on human trust? This is where Elon's money disappears line gets misunderstood. Yes, money full of friction and bureaucracy loses relevance as abundance rises. But coordination doesn't disappear. Finality doesn't disappear. Someone still needs to pay someone, settle, and close the loop. And that's why Bitcoin starts making uncomfortable sense. It's digital, but anchored in energy. It settles with finality, without asking permission. So the singularity doesn't replace money. It stress tests it. Here's the accelerator people miss. AI crushes time. The distance between idea and execution shrinks to minutes. That means advantages die faster, and mistakes get expensive. So in 2026, a lot of people will get steamrolled trying to play by old rules in a new game. And Michael Saylor's point lands harder here. The people with the most to lose adopt last. Comfort defends the old system. Exposure looks for an exit. So ask yourself, honestly, in a world where automation eats teams and competition becomes global by default, what are you anchoring your wealth to? A system that depends on banks, intermediaries, permissions, business hours, and emergency measures? Or a system that runs the same way, block after block, no approval required? Because Elon's point is the one nobody can cheat. You can't print energy. You can't pass a law and create it out of thin air. Bitcoin took that physical reality and turned it into monetary rules. Real cost, verifiable scarcity, final settlement. And that's why the usual take is backward. People think AI makes Bitcoin irrelevant. But AI may make irrelevant anything built on promises, and make more valuable anything built on truth, rules, and finality. Then comes the deeper tension. Technology's natural direction is deflation. More efficiency should mean prices fall, but the monetary system fights that with inflation, stimulus, and patchwork. AI accelerates deflationary pressure. Fiat systems accelerate monetary expansion. When those forces collide, someone gets crushed, usually the person holding weak money thinking they're safe. That's why Bitcoin wins in both outcomes. If you're pessimistic and trust breaks, Bitcoin is the exit. If you're optimistic and abundance explodes, Bitcoin becomes the anchor, because abundance increases the need for honest money. And yes, the fear always shows up: quantum. If quantum breaks cryptography, it's not a Bitcoin problem. It's a digital civilization problem. Banks, governments, militaries, payment rails, private data, and everything. So if it becomes real, the world upgrades. Bitcoin is software. Software adapts. And the why not gold argument is stuck in 2015. Gold doesn't scale at software speed. No instant settlement, no real-time audit, no frictionless portability, no programmable integration. Bitcoin is digital monetary infrastructure, scarcity anchored in energy. Now bring it home. If AI accelerates the world and energy becomes the bottleneck, the real question isn't, is this hype? It's, what system survives the new speed without requiring permission? Because a world that accelerates doesn't tolerate slow settlement, bureaucracy, blind trust, or rules that change mid-game. And that's why this isn't about some distant future. It's about what already started. Elon doesn't throw words into the air. He plants minds. When he says energy is the true currency, he's not philosophizing. He's pointing at what comes after the euphoria, the physical world collecting its debt. Because AI doesn't create magic, it creates demand. More models leads to more servers. More automation leads to more data centers. More robots leads to more energy, more hardware, more security. And the faster AI accelerates, the more the entire system depends on bottlenecks you can't print. And that's where traditional money shows its weakness. In a world where the cost of almost everything drops, what holds value isn't what's popular, it's what's scarce, verifiable, and impossible to manipulate. That's why Bitcoin isn't an investment. Bitcoin is a reality filter. It doesn't ask for trust, it doesn't negotiate rules, it doesn't change because someone pressed a button in a closed room. And here's the part the market avoids, because it's scary. When AI compresses time, when the distance between idea and execution becomes seconds, the risk isn't volatility. The risk is holding something that depends on permission, intermediaries, and promises. And promises break. So forget up or down. That's talk from people staring at a chart and missing the era. If this just flipped a switch in your head, hit like and subscribe, because here we don't chase hype. We see what's coming before most people do. And now the real question is, when AI makes the world faster, more automated, and more hungry for energy, what will you anchor your wealth to? Promises that can be rewritten, or rules no one can bend?